How the stock market actually works, a beginner's guide. Hey everyone, welcome back to Invest with Alex, the channel where we make investing simple and easy to understand. If you're new here, my goal is to help you build wealth by breaking down financial concepts in a way that's easy to grasp. No complicated jargon, no overwhelming information, just clear and practical knowledge. In our last episode, we talked about the basics of investing, why it's important, the different types of investments, and how to start. But before you start buying stocks or ETFs, you need to understand how the stock market actually works. What happens when you buy a stock? Who are you buying from? Why do stock prices go up and down? That's exactly what we're going to cover today. So grab a notebook, get comfortable, and let's dive into the world of stocks. And if you haven't already, make sure to hit that like button and subscribe so you don't miss out on more investing insights. Let's start with the basics. What exactly is the stock market? At its core, the stock market is a place where people buy and sell ownership shares of companies. These ownership shares are called stocks. When you buy a stock, you're buying a tiny piece of a company. If the company grows and makes more money, your stock's value increases. If the company struggles, your stock's value might go down. Now, you might be wondering, where does all of this buying and selling happen? Well, stocks are traded on stock exchanges. The two biggest ones in the US are New York Stock Exchange, NYSE, the largest stock exchange in the world, home to companies like Coca-Cola, Disney, and Boeing. NASDAQ, the second largest exchange, known for technology companies like Apple, Amazon, and Tesla. But here's the thing, unlike a physical marketplace, most stock trading happens digitally through brokerage platforms like E-Trade, Robinhood, Fidelity, or Charles Schwab. You don't need to go to Wall Street to buy stocks anymore. Everything happens with a few clicks on your phone or computer. One of the biggest questions beginners have is, why do stock prices go up and down? Stock prices are determined by supply and demand. If more people want to buy a stock than sell it, the price goes up. If more people are selling than buying, the price goes down. But what actually influences these buying and selling decisions? Let's break it down. Company performance. If a company reports strong earnings, profits, investors gain confidence and buy more shares, pushing the price up. If earnings are weak, the stock may drop. Economic conditions, inflation, interest rates, and job reports all affect stock prices. A strong economy often leads to rising stock prices, while economic downturns can cause declines. News and events. Major events like a CEO stepping down, a new product launch, or a scandal can move stock prices dramatically. Market sentiment. Sometimes, stocks move simply because of investor emotions. Fear and greed drive the market more than you might think. So, how do you actually buy a stock? Here's the step-by-step process. Choose a brokerage. You need an account with a brokerage like Fidelity, TD Ameritrade, or Robinhood to buy and sell stocks. Fund your account. Transfer money from your bank account into your brokerage account. Search for a stock. Enter the stock's ticker symbol, e.g., Apple for Apple, TSLA for Tesla, to find it. Place an order. There are different types of orders, but the most common are market order, buys the stock at the current price. Limit order, lets you set a specific price at which you want to buy. Confirm your purchase. Once your order goes through, congratulations. You're now a shareholder. Before we wrap up, let's go over some final key takeaways. The stock market is where companies sell shares and investors buy and sell them. Stock prices move based on supply and demand, company performance, and investor sentiment. Buying stocks is easy with a brokerage account, but understanding market trends takes time. Investing is a long-term game. Don't panic over short-term movements. All right, that's it for today's episode. If you found this helpful, hit the like button, subscribe, and drop a comment below. What's one stock you're interested in buying? And in the next episode, we'll be talking about how to analyze stocks like a pro, so you can start making smart investment decisions. See you next time.